Hello, Sylvain Vervoort with Technical Analysis Part 31. In this part we will look at the application of risk management, continuing with the use of trailing stops, and here looking now at my proprietary trailing stop called TRENDS. That stands for Trailing Resistance and Support. Remember, the best technical analysis will not be successful without good money and risk management. Pay a visit to my website at stoccata.org and buy my new book Capturing Profit with Technical Analysis, a complete technical analysis reference and a winning trading system. The different trailing stops we talked about until now allow sufficient price reaction that makes them most effective for medium-term trend trading. Using lower percentages or a smaller multiplication factor for the ATR trailing stop will mostly result in too many losing trades. If we want a short-term trailing stop, it will have to take into account much more the short-term price action. So for the creation of trends, we will look directly at the price movement. The most reliable reference is price support and resistance, and the main item here is price turning points. In an up move, we define a pivot support point when there is a low price with the two bars before and after this low having equal or higher lows. In the video about windows or gaps, we learned that up gaps or windows in an uptrend are giving support. So we will add code to detect up gaps and make use of this gap window support. The disadvantage of using gap windows as a support level is that we also take into account the common gaps. Common gaps are most of the time closed within a week on a daily chart and therefore not very useful as a support level. It is, however, almost impossible just to select the breakaway, continuation or exhaustion gaps and not the common gaps. Some way we will have to compensate for that later on. More information on gap windows can be found in Stoccata video number 10 about windows. We are now left with the fact that price can move up a number of days without creating pivot or gap window support. When the trailing stop moves too far away from the price action in these circumstances, we will enforce a maximum percentage allowed loss. After introducing a minimum required gap size and allowing some extra space below the gap, it now looks like we have a basic stop loss that is closely following the price action in an uptrend, as you can see in this chart. Remember, we still have to compensate for the common gaps that I could only partly correct by introducing a minimum required gap size. An easy but effective way is making use of the high price. We will not close a long position when the trend's trailing stop is broken by the closing price, but only when broken by the high price. Look here at the trends in action in an up move. To complete trends, we have to define the formula for the downtrend move. One possibility is to use the same rules for the downtrend as for the uptrend. Question is, do we want a very close trailing stop for the downtrend, considering we only want to trade long positions? Making money during medium and longer term downtrends, trading only long positions, is very unlikely. We probably are much better off just staying out of long trades during medium-term downtrends. So I prefer to use a modified ATR trailing stop to keep us out of the trade as long as we are in a medium-term downtrend, as you can see in this chart. And this is the complete metastock formula for an auto-switching trends trailing stop. You can find this formula at stoccata.org/metastock/formulas.html. Remember the buying and selling rule. Buy when the high price moves above trends and sell when the high price falls below trends. In this chart you can see how trends follows very close the price move in an uptrend while leaving enough room for price reaction during a downtrend. Using your own trading entry method, you certainly want to be able to use trends with your own entry date and initial stop level as shown in this chart. The breaking of the trend's trailing stop is signaled with a downturn. And this is the complete metastock formula for the trend's trailing stop from a start date. You can find this formula at stockato.org/metastock/formulas.html. Remember the selling rule. Sell when the high price falls below trends, also signaled by trends turning down. This is the end of the part about the trend's trailing stop. Next we will apply our technical analysis knowledge presented in the videos practicing some trades. Tell your friends about these videos, and while visiting my website, order my new book Capturing Profit with Technical Analysis, a complete technical analysis reference and a winning trading system. See you in the next video.